The Federal Reserve's new strategy on inflation means cheaper loans. Financial expert Chase Wilsey joining us now to explain the benefits. Chase, good morning. Every day something's new.
Good morning. I know things are always changing here.
Oh my goodness. Okay, so the Fed now shifting to what's called average inflation targeting. That's not a band playing Coachella or something. What does that mean and why the change?
Yeah, so what this means is we know the Fed has lowered the interest rate on the Fed's fund rate or their benchmark interest rate to 0%. And what this is, it's an accommodative monetary policy to help with economic growth. Now, the change here is they used to look at just saying, well, if we hit inflation of 2% or we have very low unemployment, we may want to increase interest rates. What this change is actually saying is we may let inflation run a little bit hotter than normal. Maybe we go 3-4%, and we're going to kind of average out different quarters to get that 2% target. Now, the reason this makes sense, well, we know that we just had the coronavirus, we had an economic shutdown. Economic data is all over the place. We fell off a cliff in March, April, and now we're seeing these economic data points that are very, very strong. I know economic data over the next year and a half, 2 years, it's going to be quite volatile. So before, raising interest rates in a difficult period, let's give the economy some time. Let's let the employment market get back on track. Let's let people get back on track before we really start to maybe hinder economic growth and raise interest rates.
In terms of getting people back on track, explain how the new approach is going to help the borrowers, because that's really what it comes down to.
Yeah, and it'd be great to get a 0% interest rate on a mortgage or an auto loan, but that's just not going to happen. But what generally happens is home loans, auto loans, and even credit card rates have a very good correlation with the Fed's fund rate. So while the Fed has come out and said, yeah, the Fed's fund rate is likely to be around 0% for the foreseeable future here, that means that we're going to have those low interest rates on those different products, which is a great opportunity for borrowers to take advantage of that. I'm not saying don't over leverage yourself and get all crazy with the debt, but be smart with that. It's a great tool that you can really use to further your financial picture.
You mentioned your mortgage, your car loans. Is it personal loans as well? Does it kind of run the gamut in terms of loans?
It generally runs the gamut. Too? What was that last one there?
Amounts, because sometimes the amounts vary and then the percentages vary based on what you're trying to borrow.
Yeah, so I mean, home loans have jumbo loans, different types of products. What I've seen is, personal loans, debt instruments are going to be quite favorable really across the gamut here.
Wow. The impact it's going to have on the stock market. We've seen the stock market the last couple of days. Yesterday, in fact, a great day. How do you see that playing out?
Yeah, so with stocks, generally, low interest rates are positive, number one, for discounting purposes. But number two, you really think about, we talked about low interest rates. That helps businesses because now businesses can borrow at lower rates and take on new projects to really help expand their companies. And expansion generally is a good thing for the stock market. I will say the stock market is a little expensive here, but generally, as I said, low interest rates is a good sign for the stock market.
Because I wanted to ask you, should people now consider investing their savings or what money they have because the interest rates are so low?
That's a great point. With low interest rates, unfortunately, it does hurt the savers, so you're not getting a big return here.
Sure.
But I generally say make sure you have that emergency fund set up. And if you haven't started investing, now's a great time to really start looking into investing. And I always tell people, be cautious. Just because I say it's a great time doesn't mean go out there and buy, crazy things. I think there's a lot of overpriced things like Zoom, Tesla, Amazon, great names there. But the stocks have gone just berserk, so I'm going to say. I mean, they're way, way overpriced. Be cautious what you're buying.
I used the word bonkers for that exact thing just a couple days ago, but you're right. Just be careful. Be cautious and talk to somebody who knows what they're doing, because I certainly don't. That's why we talk to you. Chase Wilsey, we thank you as always for the great advice.
Of course. Thanks for having me.
You got it, bud.